Hey everybody, Economic Ninja here. I hope you're doing well. It seems like everything is coming apart. Everything's falling apart at the seams. We're gonna be talking about what just happened with the Bank of Japan and their yields on their bonds. We're gonna talk about our bonds. But first, if you can do me a big favor, I'm setting up a secondary channel and it is entitled Ninja Motivation. And I don't know if you guys know this, but I've wanted to be a motivational speaker for a long time. I wanna help as many people as I can. And how I'm planning on doing that is mainly helping you through finance and getting out of debt and getting ready to absolutely crush it during this next market collapse. I'm gonna link a video below in the comment section if you wouldn't mind going to that link and taking a look at the video and possibly giving it a thumbs up or subscribe. That channel is for a couple different reasons. One, it's also set up as a backup channel, if you guys know what I mean, all right? So everything is coming apart. We are looking at this move I'm gonna link this story below. This is out of the Hedge, but we're gonna talk more than just the Bank of Japan. It's entitled, "The Move is a Big Deal," quote unquote. The yen tumbles after the BOJ, Bank of Japan, intervenes to cap JGB yields amid a global sell-off. Now this article just came out. You're gonna be seeing this first thing in the morning, Monday morning, and we're gonna find out if this sell-off continues through the night in America, the morning or day of in Japan, Monday. And it says right here, last Friday when the Bank of Japan unexpectedly failed to intervene with one of its trademark offers to purchase an unlimited amount of bonds. Okay, I want to stop right there. Think about what was just said. When the Bank of Japan unexpectedly failed. Okay, the Bank of Japan has had economic issues for well over 20 years, been in stagflation, and the Bank of Japan has been propping up their stock market. And now it is failing. It is official. This is really happening, okay? Could everything turn rosy in a day or two? It could, but the long-term trend right now is down for all markets worldwide. We are in a cyclical bear market, all right? Now, this isn't financial advice. I'm not a financial advisor. Do not buy and sell trade stocks or anything like that based off of what I'm saying. I'm trying to put together the very large picture for you, all of the pictures, so that you can get an idea of what's going on in the world. And right now, the Bank of Japan is unable to keep the sell-off from stopping. It said that it had made an agreement to purchase unlimited amount of bonds when the 10-year JGB broke above the 0.23% level, all right? A level which 1 month ago prompted Kuroda to step into the market to contain further yield gains. You see what's happening is so many people are not wanting to buy Japanese bonds that the yield is being forced up very similarly to what is going on right now in the United States market. You see, as of the taping of this Sunday night, in America, the futures for the 10-year just crested over 2.5%. It is moving at a breakneck pace up. Now, if you look at the historical trend for the 10-year bond, you will see that it's been over this percentage many, many times. As a matter of fact, most of the last 30 years. But you have to remember, there's never been this much debt compounding at these rates. You also have to realize that the 10-year has a direct influence, whether it's direct or not, it definitely influences mortgage rates, right? Because the average person keeps a home or a mortgage between 7 and 10 years, okay? So that's a lot of banks like to use the 10-year as a gauge where they're pricing their mortgage rates at. So this is a very, very big deal. Now we're gonna go down this a little bit. Okay, it says on Monday morning, okay, so as of right now, this is brand new, one day after the BOJ left many stunned with its refusal to announce an open-ended bond market intervention as yields spiked, the central bank changed its mind and conceded that it was not willing to risk a bond market collapse, announcing that it will purchase an unlimited amount of 10-year bonds at a fixed rate of 0.25%. Okay, now think about these key words, collapse. When a bond market collapses, everything collapses. When yields explode higher, We will have deflation on a scale that you would not believe. Why? Because certain prices are going to explode and people are not going to be able to maintain their way of life. And that's why we are literally documenting this collapse day by day as it happens. Are there ebbs and flows? Yes, there are. Do markets do these? Yes. When a market tanks real hard in a day, is there a bunch of people trying to buy the dip and it comes back up? Yes, there is. But if you look at what's going on right now, this is what you're about to see over the next year to 2 years, okay? It says the decision comes as interest rate hikes by major, wait a minute, I have to stop here. First off, many of you might be thinking at this point, why are we talking about the Bank of Japan? The Bank of Japan is very vital to the world's economy. It is one of the largest economies when you look at its GDP, and it is very vital as a trade partner with the United States. And when you talk about United States trade partners, when they are having issues, it is a contagion, okay? So I want people to remember that this is why we talk about Japan. This is why we would talk about Europe as well, because both Japan and Europe are very tied in with the United States economy, okay? So it says the decision comes as interest rate hikes by major peers, such as the Federal Reserve, have sent yields across the globe soaring, adding upward pressure on Japan yields. Now that is another very good point. You see, as the United States starts to raise its rates, if people were getting a, let's say, a certain rate, and we're going to set Japan aside, anywhere in the world they're getting rates, let's say at this level, and the Federal Reserve's rates or the U.S. bonds were lower. As the U.S. starts to raise its rates, what happens is investors start to go, you know what? They may feel that the United States debt is stronger and more secure than the country that they're in, whether it be Japan, Australia, just name any country. But as the interest rates start to come up, because many countries have yields well above, 50 basis points or 0.5% or 1%, okay? But as the US starts to raise their rates, what happens is investors start to flee out of those government bonds and into the US ones. And this could cause a disruption in the global bond market because you have less buyers of global debt throughout the world and you have more buyers now of US debt, okay? So that imbalance can also, it's like imagine one of those, the Days of Our Lives, the soap opera had that little, I don't even know what it's called, put it in the comment section below, but the thing could tell time, the sand in the hourglass. And so what happens is if it's leaned over and it's all equal and all the investors are buying equally, that's great. But what happens is when it gets flipped on one end and the sand starts to leave the top and go into the bottom, that imbalance can cause all kinds of issues, from hyperinflation in certain currencies to massive trade imbalances, and countries can go literally broke almost overnight, seemingly overnight. And that is literally what is happening right now. Seemingly overnight, we are seeing the Bank of Japan losing control of its bond market because buyers are not there. Now, I want to say this last thing, and I think this is the most important deal. It says the BOJ just said that no bids tendered for fixed rate bond buying offer. The issue is we are now in a moment where central banks are having to prop up, or governments are having to prop up their economies because investors are fleeing. They're running. I mean, even right now, you're seeing precious metals like silver and gold are becoming very hard to get, especially silver. The premiums are exploding because it is taking so long for these companies to get stock from mints around the world because there are more buyers than there are sellers. People are holding on to their precious metals, and it doesn't matter at this point what's going on with the market price because the true market, the overspot, the premium market is exploding. And trust me, it's not because of any of these companies that sell coins are trying to make a dime. If they don't sell, they're not making any money. So they don't like high premiums. It sounds funny. A lot of people don't understand that, but these companies don't like high premiums. They like low premiums because it's easier to conduct business because people go, okay, that's normal, and they buy. So I hope you guys got something out of this. I'm gonna link this story below. I can't wait to see what's going on tomorrow with BOJ. It's gonna be very interesting, guys. Thanks again for clicking on that video in the comment section and checking out that other channel. Please hit the subscribe button if you do follow this channel, because then there's a way of backup. But also, I'm going to take what I want to do with my life's work a different direction as well. And so I would love for you guys to see that and give me some comments and feedback. All right, guys, that being said, I thank you so much. Economic Ninja is out.